Hi, I'm Patu from Free FinCal, and today I published my hand-picked list of mutual funds called Plumbline. This is for the third quarter of 2019. The last update was in April and now in July. So this was started in 2017 as an accompaniment to the Free FinCal Robo Advisory template because the Robo template helps you create the plan, and then after the plan you need something to invest in, so that I had to come up. Basically, I was cornered to mentally cornered to come up with this kind of a list. This list comes with a long um, 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 list of or array of disclosures, which I would suggest that you please read. The list is in the description box or here. I will get straight to the fund names. I want to make it clear that this will not work unless you have a clear goal and you know how to review the mutual funds. You can't just pick the mutual funds because it's there. You should know how to review the mutual fund after you have picked it from the date in which you started investing. And unless you are going to do that, I don't think any fund listing will be of any use. So that's the table of contents. So let me just dive right into it. I've added a couple of categories. So there's a big FAQ and a disclaimer. I would suggest that you read it. I will not get into this. So let's get to the overnight mutual fund. So these are mutual funds that invest in overnight bonds, and essentially it is for it's just somewhere to put your cash in. Don't expect returns. Just a tax efficient savings bank account kind of a debt fund. I picked L&T Cash Fund because when I picked it, it had the highest AUM, but things in this space have changed dramatically. There are a lot of funds with many higher AUM. Notice, for example, HDFC Overnight Fund had only 146 crores in end September 2018, but it had only 146 crores in end August 2018. Next month it became 3,186 crores. So the corporates or the big institutional investors, either on their own or because of the advice of the AMCs, they have moved their money to overnight funds. And even before the SEBI liquid fund rules that I talked about yesterday. So there's no problem here. Any fund will do. I just picked it. I just picked one. If there is one fund category where you can do inky pinky ponky and safely invest, it is this fund. It is this category. That much is fairly clear. There is practically no interest rate risk because the bond maturity is only 1 day. The credit risk is non-zero, but it is fairly small because it's kind of the Clearings Corporation of India essentially handles this, and they take on that credit risk. And of course, the duration is small, so it should be fairly alright, but it's not zero. That much should be clear. You should use it only if you're super scared of all debt funds or any kind of mutual fund, and you put money in this for safety, for parking money. I mean, let's say you believe in, or let's say, for example, you made great gains from equity, let's say 50% gains. You remove the profit and put it in this fund, and wait for the dip in the market and move back in. That kind of a thing, this will work. Don't worry too much about returns and so on. Liquid fund, in this, I've explained yesterday that I like Quantum Liquid because they're very clear. They will not take on corporate bonds. They're already marked to market, but it's a fairly safe fund. It will not have too many stars because it invests in safe bonds. Again, you should use it only for parking money. It will give you a touch more returns than overnight funds. You can safely invest in this. Of course, it's not without risks, but among the lot, this is relatively better. I have invested a small amount for emergencies in this Quantum Liquid. Equity arbitrage, I used to have UTI arbitrage and ICICI equity arbitrage. I was looking for an excuse to get rid of the UTI fund after the way the UTI mutual fund house handled the DHFL crisis. When I looked at the portfolio, I don't know whether I did it last time, but when I looked at it this time, I found small finance bank FDs. So I'm not comfortable with this, so it goes out. I had incorrectly written in the morning that both these funds hold only arbitrage and no direct or unhedged equity. Anand corrected me in Asana as well, saying ICICI can hold up to 5%, but I think that's fairly all right. Thanks, Anand. So the credit risk will be applicable. The credit risk will be low, but it will be applicable to the bond part of the portfolio. Please don't forget that after the SEBI categorization, they messed up this category. They only need to invest 65% in arbitrage. The rest can be in bonds. Those bonds can be risky. They can undergo default. There will be a small interest rate risk also applicable to the bond part. So be careful. The volatility, in my opinion, the risk of these arbitrage funds have become higher because of this increase in bond weightage after the SEBI rules. I have used this in two ways. I use it for my son's education goal. My wife has invested some of her money as part of her emergency fund, so we have this. Don't expect too much return, 6-7%. That's all. Don't worry too much about it. There are interesting ways in which you can use arbitrage funds. You can have a look at that. Ultra short term, Franklin India Savings Fund. If there is one Franklin debt fund which has got low credit risk, where you don't have to worry too much about credit issues or the bonds that the kind of bonds that they hold, it is this fund. It's fairly low medium kind of credit risk. Its interest rate will be low. It will invest in bonds of a few months in duration, if I'm not wrong. But do use it for durations 1 year or more, so you can handle there will be volatility, but it will not be too much. The interest rate volatility. Credit risk is there, but relatively quite low. You can use it for short-term goals, generating income, saving money, whatever. You can expect FD kind of returns. Don't especially from this fund. Don't expect to beat it. If you want a slightly higher risk option, you can go for the fan favorite Franklin Ultra Short Term Bond Super Institutional Plan. It's an extraordinarily risky fund. Don't get into this fund looking at the 8%, 9% kind of annual returns that this fund has generated. It's a mistake. It is not for everybody, but there are all types of people in the world. So if you are ready to suffer the credit problems when they occur, choose this fund. Otherwise, don't choose this fund. That's why I've updated this risk from medium risk to high risk, because people don't understand. They look at the returns and just forget about it. It is high risk fund. Don't blame me later, or don't blame anybody else later. You only have to take responsibility for it. So it's for 1 year and above. You can again use it for saving, generating income, but with risks, whatever, you can same as the above. For 5 years and above, you can consider Franklin India Income Opportunities. Again, the risk will be high. I think Muthuraman asked me, I forget what his name, who asked me in Asana as well, why not a banking and PSU fund? Yes, I should explore that avenue, but I think this is a fairly, it's alright. It still invest in high risk debt, but you can use it for more than 5 years if you're okay with it. It's slightly lower than their credit risk fund, which is coming next, but it will also be risky. There is a corporate debt. This will invest in corporates and PSUs, slightly high-rated bonds of AA plus and above, but still the credit risk for the rest of the portfolio will be high. This also can be used for 5 years and above. You can consider that. And this is for people who want to play with fire. Credit risk fund. It was earlier called corporate bond opportunities. Extraordinarily high. This is probably the highest in terms of credit risk. Not for the faint-hearted. Don't take risk unless you understand what you're getting into. It had a problem, small problem, just a couple of months ago. Credit problems in this fund are like everyday events, so you should be ready for it. This is what I had talked about, this SBI Magnum Constant Maturity Fund. I think I made a video on that, I don't remember. I had written about it. This is a gilt fund for very long-term goals, more than 10 years. This will invest, most of the portfolio will be in 10-year gilts. So you can use it, provided if you don't want any kind of credit risk for your long-term goals, you can consider this, but please be careful. The price you have to pay for avoiding credit risk is the NAV will suddenly shoot up, suddenly fall down. It will gradually keep going down. depending on the rate movements and so on. So if there, for example, if there is no rate cut for a long period and the rate keeps going up, then there's a serious risk in this kind of funds. You must be ready to rebalance and reduce that risk, otherwise it will not work for you. So wherever you go, you cannot hide from risk. You just have to pay a price. So onward to the equity funds, tax planning, the Aditya Birla tax relief or the DSP tax saver, they have wonderful performance consistency using the June 2019 mutual fund screener. Therefore, I have added them. In case you are a first-time tax saver and you want to, and if you are interested in considering the Parag Parikh tax saver fund, which is an NFO that is on, you can consider it, but only if you don't have any ELSS funds before. But there's no, please be careful. I again repeat, there's no need for ELSS funds. You can save tax with EPF, PPF, VPF, make it as part of your debt portfolio and have normal stocks and equity funds in the equity portfolio. There's no need for it, but if you're a new investor and don't have any kind of ELSS or tax saving investments, you can take a chance with Parag Parikh tax saver fund. It should be managed similar to the Parag Parikh long term equity fund, which is also part of the Plum Line list. I had reviewed this fund in a couple of days ago. You can check out that video. Now to the hybrid, the balanced or the equity oriented or aggressive hybrid funds, I have the HDFC hybrid fund here, or the HDFC balance fund, the Franklin balance or Franklin hybrid fund, ICICI equity and debt fund. They all have very decent performance consistency. They have the right balance of reward and risk. So in that category, so I think that's fairly decent. I invest in HDFC hybrid for my retirement. Multi-asset, there's a video link I should check. So multi-asset is a new category I've added. This can be used for first-time investors who are scared. The volatility will be fairly low. This will invest minimum 10% in gold, minimum 10% in bonds, and 10% in equity. The equity portion and the other portions will be dynamically adjusted by the fund manager depending on the market conditions. This will follow a strategy similar to the ICICI Balanced Advantage. You can read the review or watch the video about this. Disclosure, the disclosure has been eaten away. The disclosure, I am invested in this fund for what? For my son's education. I mean, earlier it was called ICICI Dynamic, then it became multi-asset. I've been investing in it. It will be taxed like an equity fund, just in case you're worried. Equity multi-cap, there were two funds here, Quantum long-term equity and Parag Parikh. I have retained only Parag Parikh, especially for first-time investors. I cannot, considering the way Quantum has been performing for the last 7 years, it has not bet the Sensex. I think with that kind of a record, I cannot recommend it for new investors. I continue to hold Quantum for my retirement. I also hold Parag Parikh fund, but I cannot recommend it to new people. Existing investors can take a call whatever they want to. Personally, I want to give it a little more time because the Sensex has probably it has been difficult to beat the Sensex because a couple of stocks in the Sensex have zoomed up and so on. But I want to give it personally a little more time because I love the downside protection of Quantum, but unfortunately this time it has kind of backfired. There's too much of downside but no returns. So the patience is running thin. I want to personally wait, but if you want to exit, it's up to you. I think Quantum is basically a one fund AMC. I don't know. I think they have to be a little more. They can't say I'm going to stick to my strategy. That doesn't work. The AUM won't come. The business won't come. You can't be too rigid, in my opinion. I think 7 years is too long a time for a fund to not beat the Sensex, whatever its strategy. I don't care what. I think that's a little much. It's a good fund, but the patience is running thin, as I said. So I have reviews on these. You can check them out. Index funds, I have different combinations of index fund. This is a kind of a large cap kind of fund where you use only the Nifty or the Sensex kind of index fund. Then I have a large plus mid cap. You can use different proportions. You can add 40% of Nifty next 50, 50% of next 50. There are different ways you can combine it. I've also, this is like a high risk where you have more of Nifty Next 50, and I also have a I think something is missing here. I think I've missed out the proportions here. So in this case, if it is large and mid cap, high risk would mean 50-60% of Nifty Next 50. Medium risk would be 50% of Nifty Next 50 and so on. Low risk would be 20% of 20-30% of Nifty Next 50. I think that's missing there. I'll have to go and check it. So using Nifty 50 and Nifty Next 50 index funds as mentioned there, you can create a high risk portfolio, medium risk portfolio, and a low risk portfolio depending on the exposure to Nifty Next 50. That's what I've given in terms of 3 categories there. You can check that out. Large cap, no large caps, because only 5 large cap funds have managed to beat Nifty 100. I'm not going to recommend any more large caps. There's no need for that. Balanced Advantage, ICICI Balanced Advantage, even in spite of its large AUM, it is a wonderful fund in this category. They're very hard to find another in this category. So fantastic record, no problem at all. Equity mid cap, Franklin, Prima, and HDFC mid cap opportunities continue to be very good performers. There is a mid cap ETF. There are also many mid cap ETFs coming, or index funds. I'm not sure. Motilal Oswal is coming up with these. I think they keep filing these NFOs. They don't bring the fund. I don't know why, but let's see. So they've done well. That's it. I think that's it. No small caps. I personally will not recommend small caps in Plumline. I think it's not necessary. A good mid cap will have enough of small caps for a portfolio. That's all you need. I don't think there's anything else. So that's the list of Plumline funds for the third quarter of 2019. If you have any questions, comments, please leave them below. I will take the Q&A tomorrow. So if you have any questions for that, please go ahead. Thank you.